Howdy, y'all. Dave Duford here, Duford Insurance Group, where we help train and recruit agents nationally to sell final expense, Medicare, ACA, and annuities face-to-face and over the phone. Thank you so much for being here. The topic of today's conversation is spotting the gotcha clauses in your insurance agent contracts. And this is an imperative broadcast for those of you who are thinking about getting into the insurance business, no matter what agency or marketing organization or MLM you're thinking of joining, or especially those newer agents who haven't really gotten the inside scoop on how a lot of insurance agencies operate and do their business. What we want to do today for you is to really give you a litany of issues not all agencies out there do when it comes to altering the arrangement you think you're getting. But not necessarily, to basically inform and educate you and empower you on what's out there, what agencies do in an underhanded fashion in many cases, and to let you know what to ask to avoid being in sticky situations where you may not even own your book of business. You may have built a business that got someone else but you rich, or could be getting them rich but not you, and otherwise relegate you to more of an employee as opposed to truly a business owner. Again, in this business, there is a lot of a MLM type of mentality, which is basically cannon fodder is what the agent is considered as, and any way to get them on board with, the song and the dance and the Kool-Aid drinking and all that is all, a means to the end. And part of that is kind of hiding some of these extenuating circumstances and contract stuff that really make the business much less lucrative than it's presented. So if you're concerned about making the right decisions, knowing what to look for and what to avoid when it comes to joining an agency, this is a very, very important broadcast. Okay, the first one I'm going to start with this is with a story. Many years ago, I was recruiting an agency out of a company named after an American president. We'll keep it at that. He was coming to me because he wanted to go independent. He had been captive for a long enough time. He saw the advantages of carrying multiple carriers. He liked our agency because of that, not to mention the commission increase. But the concern he had was if he had left within the first 2 years of his contract, that he would lose out on approximately, in his words, around $30,000 in unearned commissions. And the problem is that his contract stipulated that he wasn't vested. He didn't own the book of business until 2 full years had passed. And on top of that, the contract read, if you're terminated for cause or not for cause, meaning if the company agency just said, you know what, I don't like this guy, I'm just going to terminate him, he would lose all those residuals. And a lot of those go to the direct upline afterwards. So there was this kind of financial motivation that a lot of these uplines that have these clauses embedded in their contracts to frankly screw the agent. And it went so far as what I heard was this particular agent had been terminated. They were threatening to take his $30,000 in residuals. And luckily, because the clause in the contract read the termination had to have been received more than 30 days out, his was actually received like 28 days out, that he was fully 100% vested. He could have lost $30,000 in commissions just off of business he wrote over the last couple of years with this company, had the timing of that notification came literally 2 or 3 days earlier. So all of this is to say, this is one of those methodologies or strategies that organizations will do. Not all of them. Some of them do. Some of them don't. I'm not going to be naming names or anything like that, but the thing that you got to be looking for as an agent doing your due diligence is looking at the agent-agency contract and looking for these clauses and hear what I'm about to say. So again, the first big thing in my mind, and guys, if you have questions about contracts or questions in general about things you should be worried about or avoid or concerned with, and you're just wanting some guidance, throw them in the chat. I'll do my best as a fellow agent to kind of guide you on kind of what my perspective and opinion would be. But the big thing here that we see a lot of, I got several different things And some newer strategies, I guess you could say, that organizations are using to kind of cull criticism or to cull really competitive pressures. We'll talk about that in a second. So if you've seen some of these old videos I've done on the topic, there's definitely some newer tricks and strategies that are being done to try to screw the agent. So we'll get into that later. But the big thing is who owns your book of business, right? If you're getting into this business and you're finding prospects and you're selling the product, you're basically doing the functions of a sales business, all right? And if you function as a business, my argument would be you should act as if you were a business. Because what happens is if you run a business, you should own the business, right? And in the context of selling insurance, owning the business means the clients are yours and the proceeds from the cash flow of the commission are also and should be yours. Not just the upfront commission, but also the future residual commission if there are any all to earn. And so what happens is, in this case, if you are in a contract and you're reviewing it and you see something listed that's saying not vested or vesting period provisions, what essentially this is telling you is that there likely is a period of time that must pass before you get those privileges of owning the book of business that you've paid for, that you've spent time developing, that you've gone out there and seen the people with the clients. Hey, Anthony, how you doing? Hey, player, thanks so much. You, long story short, are at risk of not receiving that money if you quit the business, the organization you're part of, if you're terminated for a reason like you committed fraud or something, right, or you lied, or even if you didn't do anything and you're just terminated for non-cause. There was nothing other than just the agency because it's at will. They just terminated your contract. When that terminates, you're at risk of losing that future commission. I have seen this time and again, and thankfully, I have seen much less of this over time, although there are absolutely organizations out there that are brand name, that you probably have heard of, that are pushing this stuff. And again, you got to look at their contracts to trust but verify that this is actually the case. Again, a couple of examples. The one I just mentioned earlier in my story, in this particular organization, the standard at the time may have changed, don't know. It's 2-year vesting period of time that must pass before they own the business. There's another very popular organization, has a very big YouTube channel. Everybody here would have heard this person if I mentioned their name. Their organization has a 1-year vesting period policy, so you have to do business with them for a year before you fully own the book of business. All the while you're acting as in the capacity of a business owner, putting time, money, and effort into running your business, but you don't own it. Crazy idea in my mind. And then the other one, another company that has, again, most of you have heard of, has a 10-year vesting privilege. So not a privilege, it's a curse. It takes 10 years to be fully vested and own that block of business. You get it incrementally each passing year. And as time progresses, you own more and more of it. So now you may ask, well, why do they do these kind of strategies? What is cui bono, who benefits here, right? Well, first of all, the upline benefits, right? Because if the agent is terminated and loses that block of business, it rolls to the upline. It's a big way that they get rich and they make a lot of money, is culling the herd of agents who do it for 6 months, 12 months, lose their residual and renewal earnings, and it goes to the upline. That's a big reason why. It's another way that agencies make money off the backs of agents, and I believe in unfair fashion. Other ways is it's kind of like golden handcuffs. What happens when you realize 6 or 12 months into here, you're in a situation where you don't own your book of business. You find this out, you're like, well, this sucks. I need to leave. I need to find a real opportunity where I'm really running a business, not pretending to. You're in a situation now to where you're like, well, if I leave too soon, I lose all that money. So there's this pull to stick with the company, even though you don't believe in it anymore, because understandably, there's a lot of money at stake that you'll lose. And so the mentality is, it's kind of like watching a bad movie. I don't know if you guys remember Geely, remember that Ben Affleck J-Lo movie, terrible movie. I remember sitting down watching it with my wife. We were dating at the time. I was like, this sucks, like 30 minutes into it. But I was like, I paid for this. Let's just watch this all the way. World's worst movie. Of course, it just got worse and worse and worse. And I was even more angry that I wasted my precious time watching this pile of crap, right? But that's the kind of mentality we have when we know we could get something and we decide to stick it out, and it just gets worse and worse and worse because our mindset changes about the business. It changes how we affect, how we sell, how we help people. And yeah, we get that money, but we lose a greater opportunity to have earned much more if we had just severed ties right away and moved to a better organization. So that's why they do this. They understand the psychology that goes behind the agent once they realize this stuff. And it's in a sense, it does kind of tie in the agent a little bit further, gets them to recruit. Then they have even more at stake of losing, and they play the game and play the part, act the part as if they really love and enjoy the agency they're part of, because if they were to leave, it's like the mafia. It's great when you're there. It's all hell when you're trying to get away. So that's why they do it. It's leverage extracted on you in a way to keep you on board, even though you don't believe in the company or the organization, what they preach. So what's the solution? How do you avoid that? Ask them. So how do you guys do vesting? Do I own my book of business from the first day? Can you show me in the contract where I own my business the first day? Okay. So if they can't, if they flip-flop on this, if they don't shoot you straight, guys, that is not a good sign ever. Okay. This is like a critical question. You have to know if you own your book of business. Trust but verify. I don't care how cool their sales pitch is, how big the owner is, and what kind of cars they drive. It's all a sleight of hand, using a magician's term, to distract you from what really matters. And you have to be responsible for yourself and ask this stuff. And if you don't, it's on you. But if you do and you don't get the kind of honest feedback, look, there's so many other agencies out there. Keep doing your due diligence. It's worth the effort to do that. So again, that's vesting privileges. Who owns your book of business? Who owns the cash flow from the clients? Kind of semi-related to that are non-compete arrangements. Now, some non-competes to me make sense. I don't have any at DeFord Insurance Group. Our agents are 100% vested, by the way, from the first day for all of the carriers. We don't have non-competes at all because they're your clients. I have the privilege of doing business with you. That's how I look at it. You're not privileged to do business with me. I'm serving you. You're my client when you join DeFord Insurance Group. And I'm so blessed that I can be in this position to help people run a business, have a real six-figure earning income opportunity to detach themselves from the corporate American grind and really free people in a way. And it's a privilege for me to help. And I don't want to put undue pressure on agents unnecessarily to make this business any more tougher or of a mental grind than it is, because it already is without all this crap we're going to talk about. But the point is that you want to make sure that you own your book of business. You want to make sure that you can contact your clients if circumstances change with the said agency. Like I said, for example, when an agent joins Ford Insurance Group, if they sever ties with me and move on, those clients are theirs. They still get paid on the business, and they can still sell business to those clients because there's no restrictions on them contacting them. Now, I will say in some arrangements, the more employee-based agencies, you're going to see a lot more non-competes, which I can justify that if you're being provided leads for free. If you're in a situation where you don't have to worry about investing in leads, those are the company's clients in my mind, because you're taking a sales job, not a business owner job. And it makes sense that they wouldn't want you to recruit away the agents or possibly sell the clients another policy and replacement. So stuff like that makes sense depending on the arrangement. That's just good business practice. But if you guys are investing money in a business, in the sales and insurance business, and you should not have non-competes, in my opinion. Some new stuff that I see, and I see a lot of these questions in the chat. I'm going to get to those at the end if you guys don't mind waiting. I appreciate it. A new one I'm seeing a lot of, and again, you won't find this out unless you're already with them, and then you ask for a release, and it's processed, and then you see the release is like a legal contract. They say they don't worry about you signing any contracts up front, and then you see the contract to sign the leave as what I would call release tit-for-tat contracts. So this is if you were to join a certain organization. There are a couple that do this stuff. There's no contracts up front, but then you find out what you were promised is totally undelivered. You're unimpressed with what's out there. You don't like what you've seen. You ask for a release. Now, a release is the ability to move an affiliation with the carrier to another carrier, okay? So it's a good thing to have because it puts the impetus on the agency to perform. So like in my agency, if somebody doesn't, if I don't do my job and you feel like I've shorthanded you, I'm going to release you to any organization you want, barring that you don't owe me any chargeback money, right? If you've charged back debt, you need to pay that out first, then I'll release it. But otherwise, pretty much an open-ended relationship. And that's good because it gives you leverage to make sure I do my job. I do my job better because if I don't, I lose you. And that's a good relationship, right? You're not bound to me by contractually, even if I just like fall short of my promises, right? So it's a good business relationship. Now, where I'm going with this is that sometimes you join an organization, it's not what you thought it was. It could be for a good reason or not. Maybe just the way things are presented, it wasn't good, or you decided to switch gears, you need to move carriers. A lot of these organizations now are saying that you can't publicly criticize the organizations in exchange for a release. So they're holding you hostage on a release based on the fact that you don't say anything negatively public about them in social media, online, and in reviews. So what I would ask when you join an organization, you have to start, instead of just asking, do you release, what are your requirements to get a release? Just sign a piece of document that says that I agree to move this stuff. That's the simplest form. Or do you require other things like me shutting up? Because what if you had a bad experience? You're now binding yourself contractually based off of the release to not talk about the company. And guys, there are organizations out there, a lot of people that put these, keep quiet clauses in the releases so they don't have to deal with bad press or criticism on their lead programs or how recruiting practices are done, etc. And if you ever look around an organization, you don't see reviews that seem honest or straightforward, that's probably part of the reason of why you're getting that. Not always, but part of the reason, okay? For me, in my company, when an agent, it's not a good fit, and it does happen, the only thing they got to sign is a one-page piece of paper that says, as long as you don't owe me money, sign this form, we will release you. And that's that. Whatever criticism they have of me, of DeFord Insurance Group, it's a free country still, sort of, kind of. And they can lobby what they want. I actually like criticism. Maybe I'm kind of a masochist for it. But I find that in criticism, even the haters and trolls, like there's a kernel of opportunity. Not everybody that has an axe to grind is, a troll. And not having that kind of opportunity to see what people say, even if it's negative, you're losing out, I think, on reality and an opportunity to improve and grow. So, for me personally, I don't require any of that because I feel pretty strongly about my relationship with my agents, even the ones that leave, that even if some critique was levied, it really is ultimately going to benefit me. And maybe it's kind of a mindset thing. We can't just close ourselves off and live in a fantasy world like we're only good and everything's fantastic that we do. Like that's you're high on your own supply. So again, long story short, when you're joining an organization, ask them first, do they release if things don't go out the way as planned? Can you get your carriers appointed through the agency moved to the agency of your choice? And then if they say yes, ask them, what requirements do you have to get a release? Do you require me to stay silent? Do you require me to shut up? Do you require me to pay off chargebacks, right? That's a legitimate question. And then that way you know what to expect. And what I would ask you to do is think, is that a reasonable request from the organization? Is it reasonable for an organization to tell you to shut up and not say anything publicly to run your business? That's for you to decide. I don't like it because I don't have nothing to hide. But apparently other organizations do. And I think that is important to consider. Now, moving on. This is another one I've seen. Not a lot, but it's annoying. Because it's the way that people try to bait you in to thinking their organization is the best thing since sliced bread, is the way that commission is reflected. The two ways I've seen this, I've seen commission levels 220%. And if you've been reading commission levels and looking at organizations, that sounds like profoundly amazing, like 200+% commission. And unless you know what it's about, you start reading the contract, it's 200% of the monthly premium. The standard in the business is the commission is based off of the annual premium. Essentially, if you look at the monthly payments times 12 for a year's payment, multiply that by the percentage rate, that's what you get paid in commission. That's the standard kind of de facto way to arrive at a commission level, is what you're going to get paid. But there's companies out there to make themselves sound better. They say, oh, it's 200% with us, but in asterisks and fine print it says on a monthly basis. So you're really getting paid like 25% of the annual premium. And when you gotta like deceive like that, guys, again, hopefully you can read between the lines of what I'm saying. If a company has to present something in a way that sounds better than it is, but it's complete trash and garbage, there's a way. It's lipstick on a pig. It's a pig with lipstick on. It's still a pig. It's got lipstick on, but it's a pig. So a pig is a pig, right? There's my, logical representation of the problem here. So you got to be thinking, why are they doing this? Why did they represent this way? Are they afraid to just tell what the commission is, right? I mean, if that's what it is, just be honest. Why can't you be transparent? What's the problem with just being straightforward? A company that can't be straightforward from the beginning, in my opinion, is one that's subject to doubt. Is this really an organization you want to be married to and be with for your entire career, much less the beginning of your career? Why would you want to get in bed with a situation like this? I would. Another way it's represented is commission levels up to 140%. Commission levels up to 150%. Okay? You think you're getting into a commission situation where you've got a reality-based ability to get those commission levels. Maybe you do if you build a gigantic organization. There's a lot of if-then conditionals. So again, ask what your actual commission levels are. Again, a very big organization we all have heard of does this right now. They have what's called their ABC 100 levels, their ABC 120 levels, and so the 120 is supposed to represent the commission level. But the problem is a lot of these recruiters don't fully communicate to the agent that it's only a couple of carriers that are at that actual level, and the real carriers you actually would want to write most of the time that are more competitive, better underwriting, better for the client, pay 20 to 40% less. And not all carriers are going to pay the same in any organization, but the point is how you represent what commissions are. It speaks to how you value and explain the relationship of the work relationship with the agent. And if you have to cloud or confuse things or oversimplify, then it's the devil's in the details here, right? And again, this is a relationship you're building. A lot of this is going to come back to that. Do you want to be deceived on something so important as commission levels? I don't. Just tell me what it is, right? And the fact that you explain something clearly and transparently, even if it's not the greatest, means something. It means you're being honest. And trust me, that is the hot commodity in this business you want the most out of. Let's see what else. Who pays you is another thing you got to look for in your commission contracts. Are you in a position where the carrier pays you, or are you in a situation where the agency pays you? Ideally, the best situation is to be in a situation where the carrier pays you directly, not the agency. If the agency pays you directly, you're probably in a position to where you don't own the book of business, okay? So that if you leave, you're making the owner of the agency rich and you have no residual, no vesting privileges, right? So this is kind of a condition of the disease, right? If you're not paid directly from the company, like ABC Life Insurance Company, but you're paid from XYZ agency, that's a sign that you're not really running your own insurance business. You're an employee. If that's what you want out of the business, that's fine. But if your goal is to build an actual business, then you're not going to find what you're looking for in this kind of arrangement. Okay. Again, with us, we're entrepreneurial driven at DeFord Insurance Group. You own your book of business. You're paid directly from the company. I don't even want to get into bean counting. It's a terrible job to have. God bless all you accountants out there. Not for me. So you're paid directly from the company, from us. Let's see what else here. Oh, and some other stuff that particularly irks me. Again, newer stuff, newer tricks to get more money out of agents unnecessarily, or to hinder their ability for success in the business. I never really liked, and I see a lot of this, I don't like organizations, generally speaking, that monetize agents. This is not so much of a contract issue, it's just kind of a business activity issue. Excuse me. And it's monetizing the agent other than actually of the sale of the policy. So again, I use my agency as reference here. When an agent joins my agency, I don't make money until they make a sale. So in other words, I don't make money when you sign up. I don't make I don't have a monthly training program. I don't sell you leads and make an uptick from the charge of those leads. I only make money when you make a sale. And to me, that's profoundly important because my goals are aligned with yours, right? Your goal is to make money selling insurance. My goal is to have you make money selling insurance because that's how I get paid. So that means everything that I do to get you to that point is motivated at helping you succeed because I lose if you lose, right? The problem I see more of as a way to try to monetize this business model of recruiting agents is making money other than on the sale of a policy. So there are organizations out there that will charge you a desk fee every month. That's what they call it. They charge you a desk fee. Another organization I mentioned earlier, somebody mentioned in the chat, they charge a desk fee just to be there or just to start with the organization. You got to give them a couple $100, right? And the idea behind it, I get it. You want to filter out the weak hands that aren't so sure about committing, but it's a profit center for the company. It's a way to make money even if the agent doesn't make money. Another way is a charge for training. The way I look at it, this is your profession. You're doing a business. You shouldn't have to be charged for doing training. You should come on board and that should be part of the package. It's because you can take the training and maybe it's not what you thought it was, and you walk away and you're out $500-600 or $1,000 or whatever it is. Doesn't matter what the price is, as much as there's a consequence of loss possibly without the opportunity for mutual gain. In other ways, you lose, they win. And the other ways, probably the biggest and most egregious form of profiting off the agent is the monetization of leads. So a lot of these organizations resell leads that are garbage. They've been resold a multitude of times. They're marked up 100%. It's pure profit. They don't even acquire a cost by reselling them again. Or they originate these leads from one source, brand them as their ABC type of special leads that are the best thing since sliced bread, mark them up 100%, and the business of reselling and selling leads becomes a hot, profitable business model. You carry the cost for those leads, and the agency now monetizes an income stream they didn't have before. Again, I'm in business. I like to make money. But the consequences to me in monetizing leads is it waters or muddies the incentive of what the organization really wants. Do they want to make money off of you making money in an override situation, or they want to just make money off you buying some junk leads, they make some money, and hopefully you'll make some, but the belief is at least we'll make something versus most likely them making nothing, right? Because they've given you the wrong type of leads. And to me, it's a perverted way to do business. I never liked it. I understand why businesses monetize the different opportunities, but it's not always about how you can just squeeze the last penny out of every activity. It really comes down to goal alignment. What do you want out of this business? Is your agency aligned with that same goal? Are they incentivized to be aligned with that same goal? That's why I don't charge for anything when an agent joins. You got to buy leads, but I don't sell them to you. You go somewhere else. Somebody else is profiting, not me. I'm referring you to organizations and lead vendors that do a good job historically for agents, giving you the best shot of success, in my opinion. And then my training is free, but it's designed to get you out in the field and motivate you to go sell, so that ultimately when you sell, we both win. That to me is the ideal arrangement with an organization or an agency that you're part of. Couple of last things here before we wrap it up. I'll take your questions in the chat. Preemptive vectoring. So this is something that I'm seeing a lot of from certain organizations, especially the captive ones, where there's one product sold, it's overpriced, and that's at risk of being replaced if the agent leaves the organization. So Vector 1 is an organization excuse me, that's designed to be like a reporting credit bureau for insurance agents who don't pay back their chargebacks. It's a legitimate organization. It serves an important function to get rid of agents from running an insurance business who don't pay back their chargebacks for people who lapse and cancel their policies. It's a perfectly good thing. It's a good thing in the business to have. However, there are companies that use it preemptively to allege chargebacks, not off off of people who cancel their plans, but off of advanced money, although secured based off of present policy. So otherwise, let's say you have, and this is the story we've got, I've got a downline agency who recruited a guy from, again, a 3-letter organization, captive, you'd know it if I mentioned it, had a bunch of business in place, no chargebacks, to speak of, and all of a sudden, the company vectored him for $25,000 or $30,000, some huge number, maybe been like 15 or 20, but it was a pretty big number. And when that hit, it wasn't based off of chargebacks. It was based off of business that he had been advanced on commission for, that wasn't fully covered for the full year. So the business was still paying premiums every month that hadn't lapsed, right? So it wasn't a chargeback. It was just based off of advanced commissions. And the reason that was done is basically this organization feared that the agent would leave, go get appointments elsewhere, and then go back to all of those clients and basically replace them with the new company. And then they would truly get chargebacks. But what this effectively does when it's used incorrectly is that it eliminates the agent from being able to run a business. Because if you're on the Vector 1 list, you don't ever get appointments, ever. There's a few companies you might have some luck with, but it's going to be very hard to get an advanced commission. And for most of us, if we have an advanced commission, then we don't have an advance, we don't have a business. Because cash flow is king in this business. You've got to pay for leads. You've got to keep things running. And if it's not there, you're up the creek without a pad. Okay? So long story short, and I don't know how to tell you how to avoid this, because they're going to tell you, oh, we don't do that, and then it happens, right? But what this kind of practice really coincides with a lot of the other stuff, like the length of time that it takes to get vested or just not vested at all from the first day, how you're paid, the captivity arrangements where you're married to that one company and one product. So it all kind of goes together, but you got to be wary of it. It is something that can eliminate you from the business if you're not careful. And for me, that's about it. I put down here free leads too as a gotcha clause. That's not necessarily a bad thing if you're in a position financially not be able to buy leads. You're going to get paid less. Some of the stuff, like you probably won't own your business, but you're giving up the, in exchange for free stuff, you're giving up some rights, I guess you could say, or privileges in the insurance arrangement, because you're now kind of converting from a business owner to an employee. So it makes sense that you'd lose some of the stuff that you'd want. But understand, there's no such thing as a free lunch. If you're getting free leads, there's typically a trade-off somewhere contractually. You're not going to own your book of business. You're going to be under subject to non-competes. You're probably not going to be vested, right? So you're going to give up a lot of this business building opportunity that really makes this business its most opportunistic, especially, let's say, in the Medicare side of the business where you're paid on a residual based significantly. So that's pretty much the main gotcha clauses that I wanted to talk about today. What's my advice here, kind of rounding this up? Do your due diligence, okay? If you're the kind of person that wants to run a business, you want to buy your own leads, you understand that usually taps you in the higher commission levels, you want to have freedom and autonomy, this is really important stuff, okay? You got to make sure that you walk through this with anybody you're looking at, and if you're not getting the kind of response based on your questions related to this, you're getting pushback, you're told no big deal, don't worry about it, they're not showing you in the contract, or they're pushing you to sign the contract, guys, that's bad news. Go somewhere else, find another organization, there's plenty out there, okay, plenty of efficiency. Don't be in a position where you feel like you have to be forced, because this is the marriage you're about to get into, a business marriage. You want a good partner, somebody's going to take care of you, somebody who's going to respect you. And because if you don't have that stuff going into this, it's just going to wear on you over time. And if you don't have a good business relationship with your partners, it's going to have a dramatic impact on your capability to be successful, bottom line. So if you enjoyed this content, please consider hitting the thumbs up button, the like button. That helps YouTube spread the word about my content, especially this one, which is so important. Make sure you subscribe to this channel if you haven't already as well. Let's take some questions in the chat here. Players, hey player, what's up? Although I've been around the industry for 2 years, I just got licensed by state. Thank you for all you do. I appreciate it. Nalila, hey, if someone is wanting a $300,000 policy, where they can draw from it if they need one in the future, which would you recommend they get first, a term or a UL? So, I mean, if their objective is to create cash value, a term by default isn't going to satisfy that. You're going to have to look at a whole life plan, a universal life plan, an index universal life plan maybe. I'm not, very proficient in kind of the traditional products like those. My business is really featured around final expense, Medicare annuities, and ACA. But that's where I would send you to look at first and foremost. Thoughts on PHP agency? Read the contract. Read the contract. Philip, thank you for this, as it makes sense on so many fronts. For example, there are captive bashing agencies who are doing what they claim, who are doing what they claim they're against. Seems unethical. What are the pros and cons? So the cons of captive and brokers or independent agents. I'll be happy to explain what the differences are, the pros and cons. I think in general, somebody who's more employee-minded, doesn't want to run an insurance business, just wants to go sell, not worry about the intricacies of running a business, which I don't think they're that bad, but I've been an entrepreneur for 15 years, right? So I'm kind of biased. Is probably best meant for a captive role. In a captive role, you're probably going to have one carrier. You're probably going to be paid less commission, but you're going to probably be involved more often in person, have an office to report to, a manager to report to. And frankly, some agents need that. Being independent and a lone ranger is difficult, and a lot of that is the truth of what you'll see and have happen in this business. Excuse me. Whereas being independent, you're paid more, but you're responsible now for finding good quality leads. You're responsible for your own training. You're responsible for addressing problems that happen. It's a bit more complicated. I wouldn't say it's too terribly complicated, but it's not right for everybody. I used to bash captive organizations constantly. I don't now, because there's definitely a place for captive organizations as long as they find the right people that are, I would say, aligned with the culture that they have. But with that said, there's certainly captive organizations that are bad apples, right? Me personally, I never joined a captive organization. I'm such a fiercely independent entrepreneurial type, it would probably drive me nuts. And plus, for me in the insurance business, I don't want to push product. That's a really important factor or belief. If I have to push the company named after American president, it's going to be higher priced. It's going to be more easier to be replaced. It's not going to be the best choice for all my clients. And yes, it's a great company. They do pay their claims well. But I'm knowingly writing business that will, I'm not going to necessarily get my client the best deal. And that's a problem for me. It's not a problem for everybody. Now, I think, is that an ethical issue? Should that be an issue? Maybe it should be, and that's debatable. But for me, it's a question of ethicality. If I can't get my client a solid deal on price and coverage and get them quality coverage, where maybe I'm sticking them with a 2-year wait because I'm willingly captivating myself or putting myself in a captive situation, I can't sleep at night, right? So I morally, for me, cannot be in that kind of position. And plus, it's just bad business. You won't be able to write as much business. You'll get replaced more often. You likely aren't going to have as good commissions. So there's a lot of things that add up. Thank you for the video. I'm in the process currently of joining an agency. I just read the contract and it stated 3 years for full vesting. Yep, I think I know who you're talking about. Company out of Florida, probably. Telesales. That's one that definitely has a 3-year restriction on vesting, right? I think I know what you're talking about. Thank you, Anthony. You got it. Glad to help, by the way, Alexander. 200% a month's premium is horrible. Yeah, I know. it's terrible. Lipstick on a pig. Diana, what about when in contract it says we cannot contact clients for 2 years after leaving? There's nothing about vesting. It depends on the dynamics of the relationship between you and the agency. What are they providing you? What are they giving you? What are you getting in exchange for that relationship? It may be okay, it may not be. And what does the market bear too? Like if you look at other organizations, why you should do due diligence with multiple agencies, you got to ask yourself, well, why would I want to do business with this company when this other company offers all the same benefits without that restriction, right? Because again, your clients are a form of future revenue, right? If you go into Medicare and cross-sell them with, let's say, you're in final expense, and you're losing out on that if you sign that contract, potentially. Sorry, hey, one company boasts of 130% commission, but it's a proprietary formula. It is 140% of a fictional number. Yeah, exactly. That's, again, this is the kind of underhanded window dressings, to say it nicely, that goes on that people are just ignorant of. And I use ignorant not in a bashing type of way, but it's truth. You just don't know what you don't know. And you see something that sounds good and make a judgment off of that with imperfect knowledge. It's what we all do in times where we don't have the prior knowledge. But yeah, that's exactly the case, 100%. Most people qualify for the 145 commission usually aren't in the field. They're top agency builders, 100%. Yeah, it is in a position where they're agency building, but it sounds good. And part of that is the sales pitch, right? Like, here's what you could get. Here's the long-term opportunity. I mean, like, that's good salesmanship. It's just, and it's real if you get there. So it's not necessarily a lie. But it's a way to attract attention, but not tell the full story. So that makes sense. I learned that about leads the hard way. A few years back, I was at an agency that did that. My direct upline would text me within 5 minutes of a lead order about making sure I called people. Yeah, right, exactly. The agency says retired didn't tell new recruits that they did that. Do the agencies file vectors or just carriers? So the one in particular is a carrier that has agencies, like regional agencies, so it's kind of one and the same. But it's typically the carriers that file the vector. How about assignment of commissions clause? A big guy, absolutely. Yeah, assignment of commissions is basically who is going. So that makes you a line of authority agent. In this case, now you don't own the book of business. Your upline does, or the agency does. You're not vested when you see the line of authority in the contract. That just means you're just selling it, making whatever the agency gives you. You're not paid direct from the companies. It's perfect if you just want a job. It's the worst thing of all if you want to run a business in an agency and have your own independent organization. That sounds like bad faith and fraud. Yeah, with the kind of preemptive vectoring for sure. Now, maybe it can be challenged, like you can challenge all debt claims, but I don't know if that will take you off a vector per se. Again, it is bad, and it's used in a way that's more combative than preventative. Thank you so much for your time and honesty. Thank you, player. Anthony, I've been listening to your content for the short time. Very educational. Makes sense. I appreciate it. And last question here. Why they say they finance leads, but once you work them, they don't. I don't know why that's the case, William. I know that they do. I've heard of them doing some lead financing. That's where the agency or the company pays for your leads up front. I used to do that, but I got out of that business. The lead business is terrible. It is not a business that's any fun. I let the people who are good at it do it personally, and then just send agents there. Makes my life easier. Well, ladies and gentlemen, I hope you enjoyed today's broadcast. That's it for today. Join me tomorrow, Thursday at 4 Eastern. We're going to have a open line Q&A. So you guys come with your questions, throw them into the chat, and I'll basically take an hour to answer those questions. Those are always a lot of fun. And if you're interested in looking at an agency that treats you like a respected partner, a business partner, that doesn't have any of these nonsense clauses, go to davidduford.com, click the FAQ link at the top of the page, learn more about how we can help you run an insurance business, not be a salesperson only or an employee, even worse. And check out the reviews, the testimonials, the length of time we've been doing this if you're looking for a partner. Ladies and gentlemen, have a great day.